Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement with Chris McIntire. McIntire Retirement Services, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your Game Plan for Retirement with Northwestern Ohio's resource for that common sense approach to planning for our financial, our investment, and our retirement future. President and founder of McIntire Retirement Services, Chris McIntire, here with us. Always a pleasure, Chris. Welcome back in.
Hey, good to be with you there, Peter. Hope you're doing well.
I am, and same for you and all of the listeners, the viewers of the podcast program. Ladies and gentlemen, always important information about your money, about your finances, about your planning, and for your financial future. We are going to give you some tips and some strategies as we do on each and every program. But to know where these things apply, it's always best to get specific direction and guidance and recommendations. And that's why Chris does provide the information here on the program, an overview. But if you would like to get down into the specifics of your plan, he also offers you the opportunity to come in for a complimentary review and financial evaluation. If you'd like to take him up on that offer, all you need to do is pick up the phone, get in touch, or go to the website to get in touch there. The website is McIntireRetirementServices.com. The phone number 800-868-1194. That's 800-868-1194. Chris, one of the biggest things I think that we think about when going to an advisor is the trust factor, understanding who the advisor is, what are their motivations in providing this advice. Can you speak to kind of that role in your office and in your perspective on what having an advisor means and what we should be looking for when we are screening a potential advisor?
Peter, the term advisor gets thrown around pretty loosely in our industry. Not everyone that, recommends investments is a true investment advisor. We are, because we adhere to that fiduciary standard. So we are investment advisors. We get paid, can charge a fee to give advice. When we're dealing with investments like stocks, bonds, mutual funds, for example, the most common pieces there. We don't get paid commissions for those transactions. We don't get paid to buy or sell. We do not get compensation from mutual fund companies to promote their products, if you will. Kind of think about, why is Coca-Cola on the top eye level shelf, paying for shelf space. Some I'm going to again use the term loosely, advisors do get paid to make those recommendations, and we would technically call them registered representatives. They call themselves financial advisors. So, you have to know, what kind of questions to ask. And one of those is, are you a fiduciary and how are you compensated specifically, would be a very fair question for the listeners to ask of their representatives.
And there are some very well-known firms, big names, Chris, that have relationships with certain fund companies, and therefore more often than not, you're going to see those funds represented in that account statement if you are dealing with a specific firm. Like, it may not be that there's anything inherently wrong with that fund, but if it's in everybody's portfolio, is it really the fund that is in everybody's best interest, I guess would be the question.
Sure, Peter. And, most of us remember Johnny Carson doing the Karnak, and he would have an envelope, hold it up to his head and tell you what's in it, basically. And, so sometimes we'll see some clients come in and I can recognize the brokerage firm. And it's like, look, I'm going to take a guess at what's in this account before I even look at it, just by looking at the logo on it. And like Peter said, sometimes the bigger the firm, the more cookie cutter the portfolios are. And sometimes that comes down from the corporate entity. A lot of banks in respects have relationships with certain financial firms for their bank advisors to promote this specific insurance company, for example, versus other ones that maybe, might have better products or something along those lines. And, and it is hard. Let's be honest. It's hard for the people that are listening out there today to know the devil in the details like Peter and I know.
Well, Chris, what inherent advantage would you feel it brings to the table for a client, for an investor or saver to deal with an independent fiduciary advisor like yourself and your firm, McIntire Retirement Services?
Because we don't trust them either. I say that jokingly, but when you're independent, you always are looking for, things that are acting in the client's best interest to be a fiduciary. And, we take that term to heart, where we really want to look for low cost, transparent type of investment vehicles for our clients. And, if there are some pitfalls in an investment, because they all have them, look, let's talk about them. What's the downside here? Here's the upside, but what's the downside? And, I think we tell people what they need to hear, not what they want to hear, I suppose. And, as you get a little more seasoned in this business, you certainly take that role much more serious than somebody who's just starting off and they got a job at a big brokerage firm and they have to make some commission type sales to offset their compensation. That's just the way it works.
Are you fairly cost conscious for your clients then, Chris, as you are comparing these different funds? There could be a variety of different funds that can meet a particular goal or fill a certain role inside of a portfolio. Are you comparing those for cost and trying to keep clients' overall expenses pretty low?
Oh, absolutely. Because we're having to justify how we get compensated. Because, when you tell someone I'm a fee-based money manager and you tell them, you go through what it costs for you to do your job, you certainly want to, show them where you can trim cost. And sometimes it's the products you use, like an exchange traded fund versus a mutual fund is probably the easiest one that some of you that are a little more seasoned out there would understand that. Exchange traded funds are very, very low cost. So we use a lot of those, of course. The other side to that is, Peter, is, you and I, we talk a lot about taxes here. So, if we can help clients save, 5 or 7% on their tax bill over the course of time, that's money right in their pocket, so there's, it's more than just the internal expenses inside a fund. It's, at the end of the day, how much did the client get to keep and how much did the government get to keep? Because we deal so much with IRAs and 401ks, as you know.
Now, Chris, a lot of times when we're getting financial advice, the standard language is consult a tax professional for any kind of tax implications. Yet every financial move has some tax implications. How is it different that you are tying those tax implications in, or how do you look at things maybe a little differently to help your clients realize that tax savings?
Yeah, I guess, if we have a niche, we pay a lot of attention to the taxation side of things. And I'll give you an example. In 2021, the market had a fair amount of volatility. So for clients that had non-IRA assets, hey, we went in and sold some losses so that we can use those to offset capital gains in the future. So we kind of call that tax loss harvesting. Not every investment goes up every single year. So, paying attention to those types of things. Roth IRA conversions, that's huge. We did more last year, Peter, in 2021 than probably any time in my career. And I certainly hope that trend continues because, as you know, in the year 2026, if there aren't any changes, income tax rates go back to where they were back in like 2016, if you will. The Trump tax cuts will expire in 2026 is what we're referring to.
Well, kind of a limited time opportunity there then, ladies and gentlemen, to do some proactive planning and hopefully save some money on your lifetime tax liability. Now is a great time to act or explore those options and those strategies that can help you to minimize or reduce, or in certain cases, eliminate some taxes from your financial future. And Chris McIntire, a self-proclaimed tax geek, and he is ready, willing, and able to help you identify where those strategies can be advantageous for you, pick up the phone, give a call, 800-868-1194. That's 800-868-1194, 800-868-1194. So Chris, you've talked about maybe a few of your services. Are there any others that you feel are important there at McIntire Retirement Services, or maybe just backing up even a little further? Why are the services of a financial advisor important to our progress over time?
Well, in our case, Peter, we help people with their health insurance and Medicare, a number of different resources. We're going to be doing that in the office this year with Heidi. We're also, on the tax side of things, and we do a large amount of long-term care type planning, if you will. And that doesn't just mean long-term care insurance. It's having a plan for people that can't get long-term care coverage because of existing health conditions that they're working with, maybe our estate planning attorney relationships that we have on assets that maybe they can retitle into other people's names. So when we say, you notice it says retirement services, not investment services. We do, I'll say it now, kind of call it the quarterback, if you will, of your overall retirement plan. Some of it's financial, some of it's healthcare related, some of it's estate planning related, and some of it's tax related.
And who, Chris, do you feel you are best fit to serve and work with?
Our typical client is probably 55 to 65 years old. If you're going to stereotype, if you will, many of them are just about ready to retire or are already retired. Not to say that we don't work with some younger folks out there that had 401ks from previous jobs as well. In today's world, the amount of assets that we deal with certainly is going up as people have been putting more and more money into 401ks. And I think you and I have made comments on this previous shows that, to see $1 million 401k, you see that every day. And 15 years ago, that was a big deal. And 20 years ago, it was almost unheard of. But how many millionaires there are here in the United States that, are middle-class Americans? So that the wealth being generated in this country just blows me away still at this point in my career.
Yeah, I actually got the opportunity to speak at a high school recently, and I got to speak to 4 classroom groups. And that was one of the comments I made, is that there are a lot of millionaires out there. It's not pop stars or influencers or sports figures or athletes. It is everyday people who understand the value of working hard and saving part of their income. And then the questions arise, Chris, is how do we best manage that wealth? Because a lot of people are great at doing what they do, but still have questions about how to handle the money to make the best use of it. And I think that really is the value of the advisor, is taking some of that burden, some of that weight, and some of that worry off of our shoulders.
Yeah, Peter, we have some clients that have worked at a couple of companies here in our area, Church and Dwight in particular, which they make Arm & Hammer baking soda and many other things. And their stock has appreciated greatly over the course of time, 20, 30 years. And many of those folks come out of there with, they might have $700 to $1 million in just the company stock. And there are some special tax provisions called net unrealized depreciation that you and I know of. We won't go into that on the show here today, but that we know how to handle that for clients. So I think that generates a lot of business for us as well, that people, understand that we know the technicalities of all of these. We have, access to advanced markets, to tax professionals, to IRA specialists as well.
Yeah, and that's a big key there, ladies and gentlemen. If you have any company stock for the company that you have been employed with, you need to not be hasty in making any financial moves, jumps, or rollovers until you hear those words, net unrealized appreciation, and understand what that means, what potential advantage that could have for you. In our acronym world, Chris, NUA is another way to talk about net unrealized appreciation. But if people overlook that, if they have not heard about that, and that's one of the big areas where if they have not consulted with a qualified, experienced financial professional, they may miss that opportunity and end up overpaying in taxes.
Absolutely. And, that has to happen at a specific time and in a specific way. So before you do your big rollovers, if you've got a lot of appreciated company stock in your company retirement plan, please give us a call and we can help you walk through that process.
800-868-1194. Again, the number to reach McIntire Retirement Services, Northwestern Ohio's resource for that common sense approach to planning for your financial investment and retirement future. And Chris McIntire, founder, president of the company, your resource, ladies and gentlemen. You'll speak directly with Chris. That's the great part about this, is you've got access directly with this resource, meeting with Chris, looking over your financial and investments and making sure that, no stone has been left unturned, no opportunity left unidentified. Pick up the phone, give a call, 800-868-1194. That's 800-868-1194. Chris, you've been at this for quite some time. What keeps you going? What do you enjoy most about the job that you have, your profession of helping people manage their money and their finances? Because it seems like that could be a pretty heavy responsibility.
Oh, it sure is, Peter. And that's a great question. And, I think it keeps my mind mentally focused, I guess, if you will. We did not go into this to build the biggest financial practice on the face of the planet and have, 20 different employees that we have to feed, if you will. We wanted to, keep it smaller and have direct involvement there. We're looking obviously at that next legacy piece as well. As time goes on, we certainly are looking to bring some another, like a junior advisor, if you will, into the platform. But I like to be personally involved. I got Robin that runs kind of our TD Ameritrade side of things, very detail oriented. We have Heidi on the insurance side of things. So, we've got a very nice team here and we like to keep it small. It doesn't mean we take everybody that comes into the door and says, hey, I'm really looking to work from you. We certainly, kind of have a little more of a screening process than ever before because, let's be honest, you can only take care of good people. So many of them, there's only 24 hours in a day.
Yeah, but it sounds like, Chris, the relationships are really one of the things that keeps you going and motivated. And not everybody has a high sense of confidence with their money. Even if they have a lot of it, they may not feel like they understand what it's doing or know the best things to do with it. So helping within those relationships to have your clients feel a little bit more confident, a sense of stability with their money and well-being. That's really the end goal of the planning process.
Yeah, absolutely, Peter. And, COVID has certainly thrown a wrench into a lot of planning for a lot of folks out there, that maybe they're working longer or they took an early retirement because they just didn't want to be around people. So we've had to evolve, some of our planning process for somebody that said, you know what, I'm done teaching. I'm going to retire now. I don't want to be around the kids and risk getting sick because of, maybe they have some pre-existing health conditions. But then on the other side of that, some folks are making money hand over fist. So they're like, hey, look, I'm going to work another 2 years. And what difference does it make? It's not like we're going to travel the world right now anyway. So, we see a lot of different aspects as to the way people approach, COVID-19, or should we call it COVID 2022 now?
Well, Chris, I was thinking on the other side of it too, that some of your clients do actually, and many of them have a pretty high level of confidence and yet still want to have that relationship with a professional advisor. They understand their investments and their money, but I think that it is that relationship and your trained, qualified, experienced eye that they depend on because maybe they don't want to leave their job and become full-time financial professionals and really retirement. The job the money has to do is that much more important even than when we were working and had the paycheck that we could depend on. So that's one of the big areas where I think kind of across the spectrum from somebody who doesn't have a whole lot of depth of knowledge or comfort with investments to somebody who is very well versed, still all have the benefit of having you as that resource.
Yeah, you're exactly right, Peter. And, some people make a lot of emotional decisions. We help them make logical decisions. And, I think if we have another little niche in the marketplace, it's, is our ability to look at all sides and say, okay, look, what are you trying to do here? And, who wants to go into retirement and stare at the business channels all day long? I don't stare at them all day long. We build portfolios that are designed around the individual's risk tolerance. We make adjustments as necessary, of course. But like you say, you can't time the stock market and get out on a good day, or, get out at the end of a good day so you miss a bad day. That's impossible. It's not about timing the market. It's about the time you spend in it. And if you're going to watch all the news shows, they talk about stocks, and every once in a while they talk about U.S. government bonds. They miss, they're not retirement planning type shows. They're basically talking about individual stocks and government bonds. Basically, they don't get into all the other different aspects there. And not that to say that there's not some relevant information there, but who wants to watch that all day long? At some point, it just becomes mud.
Yep. But the bond market actually dwarfs the size of the stock market. And yet we hear very little about the bond market as compared to the stock market, because the stock market moves a little bit more quickly and unpredictably. So therefore it's more exciting. And that's what drives the viewership with those news channels. But Chris, I've always appreciated on this program the fact that you do back up and say, hey, listen, folks, there are benefits, there are disadvantages. And I think you do a great job of weighing those fairly, that it is an evaluative process in your hands, that you are evaluating where a particular tool or investment vehicle may fit in as part of a plan to provide us optimal benefits and decreasing any drawbacks or negatives as much as possible within that planning process.
Yeah, I think, we've become well seasoned into doing that and found a lot of success in, not picking sides, but let's talk about the good, the bad, and the ugly of everything, because there is no perfect investment out there. And, a lot of people get disinformation, not information. So we try to help out.
Chris, in other sources that I have heard, it's kind of, there's one tool and one tool only, and this is the only tool you should ever consider, and it's the best thing since sliced bread, and it's going to solve all the problems that you have into your financial future. That to me is kind of a warning sign that maybe that's not an advisor who keeps the most open of mind and really evaluates all of the tools that are out there and understands their benefits and disadvantages.
Yeah. There's a firm you'll see on TV all the time, and, they talk about they don't like annuities at all. Well, there are some I don't like either. There are some that we utilize quite often because they serve a definite purpose. But, how can you call yourself a fiduciary type advisory firm if you eliminate the one account or the one investment that can eliminate you from running out of money, which is the largest concern of today's retirees? I don't understand that.
Again, ladies and gentlemen, we are talking with Chris McIntire, president and founder of McIntire Retirement Services. If you've got questions, if you would like a non-biased forensic financial analysis, digging in, seeing what you own, talking about your goals, making sure that the investments and the dollars align with helping you achieve those goals into the future, pick up the phone and give a call, 800-868-1194. That's 800-868-1194. Chris, are there any reasons or motivations that you find to be common reasons why people do end up coming to see you? I would imagine big events or something like the turn of a calendar page, the new year, maybe a time and period within the year that you see a little bit more activity, but mostly like big events in a person's life, passing of a loved one, retiring from a job, moving to a new job, those kind of things are where you tend to see people, but maybe that's not the only time that people need to think about coming and seeing an advisor.
Yeah, you're exactly right, Peter. And, we've been doing this so long, people have come in and talked to us in the past. And like you say, maybe they changed jobs, maybe they retired. So those are some triggering events that give them access to the ability to do things with some of their investments. Some folks come in and will simply do some term life insurance, for example, because they had a job change and they didn't get to take their group life insurance with them. They said, you know what, well, I better get something now. And then, we may end up doing some different types of business down the road. And I think some of that just comes with being around, for a couple of decades here. And, you build a nice social network. And, as you know, Peter, I'm kind of out there in the community anyway. So I just happen to know a lot of folks. And we're pretty blessed, obviously, with circumstances that have given us some success.
Well, again, ladies and gentlemen, there's always reason to get perspective, to get a plan put together, even if you already have a plan, to get a review, an update, a second opinion on that. It can be beneficial for your financial future in order to take a look at things with different eyes from time to time. Pick up the phone, give Chris McIntire a call, 800-868-1194. If you want to plan proactively, but maybe don't know where to start, if you have done some proactive planning, but want to know what's next, how do you complete the plan? If you want to know when can you retire, what does it take to do that? Can you afford to retire? Have you saved enough, or what is that number? You want to identify some potential obstacles in your way, or maybe you haven't been as thrilled as you would like to be with the performance of your investment plan over the past several years. All of these probably reasons why folks do eventually get in touch with Chris McIntire, but always best to be proactive and plan ahead. Pick up the phone, give him a call, 800-868-1194. Chris, where should that conversation with an advisor, a financial planner begin? Like, what are some of the questions that start that conversation, get the ball rolling to a productive time meeting with an advisor?
Yeah, first one is do you adhere to the fiduciary responsibility? What type of investment strategies do you utilize for your clients, and include everything? We do insurance, where some fee-only advisors may only do investments, and then they'll say, well, you need to go talk to so-and-so to do this for you. So some people have different lines of service in their business. So ask about those, and then maybe ask about the referral network. Who do you have for health insurance, Medicare? Do you have estate planning attorneys? Will you speak with my accountant? And, in many cases, we pay to have a lot of our clients' taxes done because we want to be involved in it, and they have enough assets with us that keeps is a nice integral part of our business practice as well.
Chris, in your opinion, as you are evaluating many different sets of circumstances and the tools in the toolbox that people have, the different accounts, are there any signs in your mind that somebody is in pretty good shape, signs of a solid financial plan that kind of are on your checklist and are checkbox items that will indicate to you that somebody's in pretty good shape?
Yeah, I suppose, a couple things I'll throw out there is if they come in for like a review, if their wills and powers of attorney are updated, that's usually a pretty good sign. If they have some money in Roth IRAs, and I don't mean $5,000 or $10,000, but if they have, six figures in a Roth IRA, then okay, they've been paying attention here, maybe doing some conversion strategies. Do they have a safe money strategy? Or is 100% of their money in the stock market? Do they have a couple of alternatives to a plan B? And, and then obviously the size of the investment accounts. Do they have pensions? And, I had some folks that came in recently and, their retirement income is about $100,000 a year, with no outstanding debt or anything like that. That's a pretty good retirement right there, of course.
The income outweighing the expenses, always at the core of any other further financial progress.
Yep. Because we live off of income. We don't live off of a big fat 401k. What's the money that's coming in? Most people listening to the show today are nervous about spending too much money, and, they're afraid of the stock market, right? Look, with coronavirus here, everything's kind of up in the air right now. The supply chain, inflation, a lot of people are nervous. And, if they pull back on some of that spending, then that obviously hurts long-term economics as well. So, certainly with Omicron running rampant right now is certainly going to continue to fuse some volatility, and hopefully it leaves as fast as it comes in. As it infects so many people, at some point it will stop spreading as rapidly, and let's hope we all get to stay safe, and it ends up being like a common cold for most of us who are protected, I guess.
Well, we have always appreciated the guidance, the insights that Chris McIntire provides. This program, keeping it pretty light, kind of a 30,000-foot view, getting to know a little bit more about Chris and the operations there at McIntire Retirement Services, some of the signs of a solid financial plan for you, ladies and gentlemen. And as always, Chris does his best for his clients, his fiduciary responsibility to help you identify the strategies and the options that will further your financial progress. If you'd like to see the difference that could make, if you'd like to see the difference in confidence that having a plan or double checking and reviewing your plan can give you, pick up the phone and give McIntire Retirement Services a call, 800-868-1194. That's 800-868-1194, 800-868-1194. You can also always visit online, McIntyreRetirementServices.com, McIntyreRetirementServices.com. Chris, it is always a pleasure. We appreciate your guidance, your perspective here on the program. And today, sharing a little bit about behind the curtains, behind the scenes there at McIntyre Retirement Services.
Hey, my pleasure, everybody. I hope you enjoyed the show. Stay safe out there. Thank you.
Visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Indexed or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract.